We are basically given what we're given. And these are royalty free rather than me getting knocked out by YouTube for playing something that we all like. Okay, good afternoon, everyone. Good afternoon. Thanks for tuning in. Welcome to the week ahead stream. For those of you that are tuning in for the first time, let me tell you, this is a weekly event. We are going to be doing this every Monday at this time. Basically, your chance to interact with me, ask me anything that you like about the markets, anything you want me to look at, any strategies you want to share with me. I'll give you my thoughts on them. Anything at all in the markets related, you can hit out and let me know. Of course, this is an interaction event, so we like to see interaction. So please do let me know where you are tuning in from around the world. We are beaming around the world at the moment. So let me know where you're tuning in from. I'll tell you, I also like to know, a bit of a survey, really. I like to know sort of the level of experience you are at in the markets. So maybe you've been trading the markets for 6 months, maybe longer term, or maybe you're just beginning off. Maybe you're just maybe setting off on this journey and seeing if it's right for you. Let me know the level of experience, not only out of interest, but also allows me to pitch these sessions at the right level, so I don't leave too many people behind. So make sure you do that. Shout out here to Alex Trade Edge. Good afternoon to you. I say good afternoon. I'm here in the UK. I know some are listening in from the US. Of course, good morning to you. And good evening to you if you're tuning in, of course, from Asia. Crypto Meet, hello to you, Rwanda. Okay, thanks very much indeed from Rwanda. We've got Chamonix Lewis from Houston, Texas. I was watching that space mission last week. Amazing. Pattaya, Thailand. You've been. I know you, Alex. You've been with me for many, many years, following me around the globe. So good to see you again, Alex. You've been trading for 7 years. That's right. Shakil's there. You go. New York. Been trading for almost 3 years. Cinetic Skull. Cinetic Skull. What, if I may ask, what style of trader are you? Are you a short-term scalper? Are you medium-term? Are you swing trading? Do you trade sort of algos, or are you pure price-driven, sort of discretionary? Let me know. Share with me your experience. Do I remember where you're from, Adnan? Ah, yes, Adnan's another follower of mine from years gone by. Are you in Dubai? I think you're in Dubai, aren't you, Adnan? I think you are, if I remember correctly. Okay, nice to see you as well, Sophia. Not tuning in from Canada, but nonetheless, I think you are Canadian because you won the. You got the quiz right last week, didn't I? And asked what the reason why we call the Canadian currency the loonie. Clearly because of the loon bird on the coin. So there you go. And Mastalo Simobi, I must be butchered that name. Sorry about that. Welcome to you. So basically what we're going to do over the next 45 minutes or so, now I've done that bit of housekeeping, what we're going to do, I'm just going to go over a little bit about what has been driving the markets for last week. Okay, the main sort of forces behind the movements that we saw. Didn't see a great deal last week in terms of movement. Got a lot of news, but not a lot of movement. And then we'll look at this week. Again, not a busy week this week. It normally happens after non-farm payroll. It tends to quieten down a bit in terms of economic releases. But nonetheless, there's a few things going out there, a couple of inflation numbers that we need to be aware of. So we'll go through basically the economic calendar for this week. Now, as I often say, even if you're not trading the fundamentals, which is basically the macro sort of look down view, even if you're not trading the fundamentals, I think it's really important for traders to basically know what is driving the markets. To keep you out of trouble, so you don't take trades just ahead of these big market moving numbers, which really can be a bit of a lottery on the actual release. But also, we are traders, and I think it's important as traders we know the industry that we are working in. So even if you're not trading the fundamentals, having an understanding, I think, is important. And that's what I'm trying to get across here as well. So a bit of tuition and what have you. And then we'll jump on to the charts and see what's really moving at the moment. One of the approaches that I've taken with the markets over the last, certainly in the last, when did I come onto the education space? About 15 years ago. More than that. About 15 years ago. What I've been saying to all my students over the years is, even if you don't trade too much on the technicals, knowing where these zones are in the markets are really important. Okay, knowing where there's massive potential for liquidity in terms of support and resistance. We never know if it's going to hold, but basically, being aware of those levels stop you taking trades into these big levels. If your profit target is on the other side, can really help your win-loss ratio. It's going to be the hardest trade in the book, basically sitting on your hands, when all your stars are aligning. But I challenge you to maybe do some testing on it. If you were to sit on your hands ahead of these big levels, if your profit target has to be the other side, I think you'll see marked improvement on your win to loss ratio, as hard as that is. So what we'll do, we'll jump onto the charts and we'll do a little bit of this. I call it zoning. So if you want me to zone any of your particular assets that you're trading, let me know and I'll see if I can get it onto the screen, and we'll see if we can put out some good zones for you to be aware of. Okay, so Zayas is a carry trader from Hungary. Good to see you. After FOMC, so here's an interesting one. I will come to this in a moment, but Adnan says, after FOMC, how is there no movement, Mr. Andrew? Because it was a bit of a flip-flop, wasn't it? I'll come to that in a moment when I get onto it. But yes, there was very little movement on the back of after the FOMC. And Shaquille wants to look at the at gold, so we'll have a look at gold analysis. We'll have a look at gold. We've been basically talking, this is not investment advice, of course. We've been talking gold up over the last couple of weeks. Actually hit all-time highs last week. Up there at 3,000, I think it's 3,044, but I'll have a look at the charts in a second. But all-time highs hit in gold. We spoke about that a couple of weeks ago, and I said that's basically my bias, but don't trade it. There you go. The late investor, hello to you as well. Okay, so let's have a quick look then at the moves for last week. Before we do, as always, sorry, got to do this. Disclaimer, this is not meant for investment advice. Do not take trades during this stream. On the back of what I say. Anyway, you can take trades if that's your thing, but not on the back of what I say. This is meant for educational purposes only, and it's not to be considered as investment advice. And you should obviously consult whoever you need to consult, financial advisor, if you are in any doubt. All right, that's done, sorted. Cover myself there. All right, last week. So as Adnan said, last week we had the FOMC. FOMC, for those that don't know, stands for the Federal Open Market Committee. It's basically the central bank of the USA that decides on interest rates. And you know what they say, if the USA sneezes, the whole world catches a cold. Pretty much everything that the financial markets are doing really centers around, like it or not, centers around what's going on in the US. It is the largest economy, second largest economy on the planet. I think China's first now, isn't it? Although there might debate on that. But so whatever happens in the US basically affects everything. For those of you that are trading the currency markets, well, you'll know that the US dollar actually accounts, you might not know the numbers, but I'll tell you, accounts for 88% of all FX transactions, happens to have the US dollar on one side. So, that's why, it is so important, obviously, what's going on in the US. And other asset classes like gold and silver and oil and what have you, all priced in US dollars. So it really is important to see, to know really what's going on in the US. So the interest rates were left unchanged. But what I thought was significant about that, Adnan, was the fact that they, have I spelled tariff right? Tariff, is that right? I can't remember now. Was that, okay, we all know that tariffs is Trump's favorite word, and he's basically going to be putting tariffs on everything, which for any trained or indeed untrained eye, it's got to consider that to be inflation. Yeah, you're putting on costs to goods and services around the world. Well, that has got to lead to inflation. Now, you remember the central bank's job is to control inflation. Central bank's job, two mandates: control inflation in and around 2% and to have maximum employment. So if inflation is pushing up, if the inflation pressures exist in an economy, the central bank should be raising interest rates to combat the rising cost of prices, goods and services. And generally speaking, if the central bank raises interest rates, generally speaking, the currency of that particular country should do well. Okay, so basically rising interest rates means a stronger currency for that particular country. Generally speaking, it doesn't always happen, on a minute by minute basis. But if you compare interest rate policy between the USA and Japan, for example, Japan can't kick any growth going at all. Stuck there, no hardly any inflation. Economies need inflation. You look at those two economies. You look what's happened to the dollar over the yen over the last three years when rates started rising in the US to combat the war and the aftermath of COVID and so forth. Rates were rising in the US, and they're falling in Japan. Negative rates in Japan, and the currency, clearly dollar against the Japanese yen, was flying higher, hit a high of 160 a while back, coming back a little bit at the moment. That's the two economies compared to each other. So they left their rate unchanged, but they said that this inflation pressure is transitory. Now, we've heard that word before, haven't we? Transitory. This is what they were speaking about. Powell actually was speaking about this. Fed Chair Powell about 3 years ago, saying inflation is transitory. That's just before inflation went to 12%, by the way. So we've heard the word transitory in the past, didn't really get it right that time. But he's basically saying that the inflation pressures that you may see in prices because of tariffs is going to be short-lived. They will come out in the wash, basically, and there's nothing to be fearing of the tariffs, and the economy is doing quite well, reasonably well. So that's why you had the S&P and the NAS that were really shocked the week before. If you remember our data from last week, we had the it's on the screen, I think. Where was it? Stocks were down something like 4 or 5% since Trump got all tariffy, and everyone thought it's Armageddon and it's all over and this is a correction. The correction has to be 10%, but we got down to about 6% decline from the equity highs. But anyway, but the stock markets last week, the S&P 500, the Nasdaq, the Dow, the FTSE, they all had quite good weeks. They all outperformed, although not to a huge degree. I think the Nasdaq was up about 1.5%. You'll see it on the screen in a moment. And the S&P 500 was marginally up as well. But the point being is it's up. And the point being is that the downward correction that we were seeing and fearing maybe, remember that disclaimer, but maybe the correction has ran its course for now. Personally, if you want to hear my view on it, and I hold a considerable amount of stocks, global stocks in some of my funds that I hold, which is sort of more of a long-term position, not intraday. I don't trade my funds on a daily basis, but I've got considerable holding in stocks. For me, I think there's further to go on the downside, and I will be happy to pick up, a whole bunch more if we get down another, say, 10%. If we do have a 10% correction, I'll most probably be getting involved again on the longer term view. So I do think the stocks have got maybe potential to trade low on the longer term. Don't ask me about today. But there you go. So I think the market's maybe not really appreciating the potential for these rising prices, and FOMC Powell didn't do anything to alleviate that. We had strong numbers in Canada. Okay, strong CPI numbers. CPI stands for Consumer Price Index, CPI. Strong numbers coming out of there. We have had a rate cut in Canada a week ago, a couple of weeks ago, I think it was now. And we also had a good uplift in retail sales. So the economy is actually looking reasonably strong over there. as Sophia would vouch for. So if you've got assets, Sophia, in Canada, well, you'll know all about that. So the Canadian dollar has actually been quite strong. So should they be cutting interest rates more aggressively? Sorry, let me get that's none of my squawk. That squawks me live real time events. So anyway, where was I on that one? So yeah, so basically, should they be cutting interest rates, more aggressively now with the economy going the way it is, or possibly not? One of the reasons why the Canadian dollar actually had quite a strong week. Canadian dollar has rocked over the last month or so because of tariffs and so forth, and it seems to be that the U.S. Government are sort of like targeting Canada to a certain extent, um, and that put the Canadian currency under pressure. The Canadian currency is actually doing okay. I'll show you that in a moment when we go to our meeting. Interest rates in Japan, okay, so they were left unchanged. They are, as you know, the lowest. Rates are moving up in in Japan, and they're moving down in the rest of the developed world. But rates were left unchanged, and Governor Ueda, who's the central bank governor, was basically saying that they will do. I think he was actually quite hawkish. Basically means talking up the interest rates. Basically, he's itching to get those rates going higher. And he was actually reasonably sort of hawkish on that. Bullish, that basically means on rates, but the Japanese, like all currencies last week, didn't really do very much. Interest rates were left unchanged in the UK. Okay, so they had their central bank rate decision as well, and they voted. There's 9 on the panel, and they voted 8 to leave interest rates unchanged. One of them went, I can't remember who it was now, but she always votes for cuts anyway. Basically, I forgot her name now, but yeah, so there basically was a general consensus to leave interest rates unchanged, although Governor Bailey was basically saying that there is room for more cuts for later on in the year. So basically left them unchanged this week, but basically is confirmed that we're going to be seeing some more cuts down the line, maybe potentially 2 more cuts between now and the end of the year. So if you're in the UK and you have mortgages, well, you would know all about that. Funded Trading Plus says, yeah, there we go. Did I do that? I must have put that. Did I put that caption there? Yeah, I've got a little caption that I can put on for that later. So interest rates left unchanged in the UK. We had a drop in interest rates in Switzerland. If you know your flags, down 0.25%. Okay, so that was as expected. No big shock horrors there. They were one of the first ones to start cutting their interest rates, having had the hiking cycle, but they are moving their interest rates lower to spur on growth, and inflation seems to be under control. We had a sharp drop in employment in Australia. If you were here last week on this live stream, I said to you, if you're really bad at your job, if you're really rubbish at what you do during the day, maybe apply to be an analyst of the Australian data, because I've never seen such a bunch of, they have no idea. They always get it so far wrong. That's what I said to you last week. Do you know what the numbers were? The forecast was going for up 31,000. That's 31,000 more people getting work in Australia. Actually came down 53,000, 52.8. I mean, 80,000 different. I mean, how? They might just have a dartboard and throw darts at the board. How can they be so wrong on that? I have no idea. But sharp drop in employment, although the unemployment rate stayed unchanged at 4.1%. And the Australian currency was a bit of a risk-on currency. With our currencies, we have sort of, I put them into 2 sort of pigeonholes, if you like: risk on, risk off. The Australian dollar is a risk on currency. It basically is a commodity currency. So as economies are doing well, commodities are consumed at a greater pace, and the commodity currencies tend to do better. Oil, of course, Canada, New Zealand, commodity currencies all tend to do better. And obviously you looked at gold last week, all-time highs, as I said. Australia, big exporter of gold and other copper and so forth. All these commodities are up, and that drags up the currency as well. So Australian dollar was actually quite strong last week. Okay, so that's basically what's been driving us last week. Here's the movers. I do this table. I had to do it manually. ChatGPT really kept me waiting this morning, so I had to do it all manually. It's reasonably accurate. To the nearest sort of tenth of a percent. There's no real change in here at the moment. As I say, the biggest movers last week. You had the NAS, that should be blue, but you had the NAS and the S&P 500 stocks slightly up. China stocks are up. The DAX was up 0.5%. FTSE was unchanged. Gold, again, ended the week only 1% up, but was actually up at 2.5% at one point. Say hit that all-time highs. Still gold, look, up 38% since this time last year. This is a year-to-year, by the way, not since the beginning of the year. So it's year-to-year, 12 months, basically 30 days. And 5 days or 7 days, what have you. And look here, this is the dollar as measured by the DXY dollar index. Basically, for those that don't know what that stands for, it's a dollar index. It basically comprises of a basket of currencies, of which there are 6 currencies in the DXY. And the main component of the DXY is actually the euro, the single currency. Actually equates to 58%. Does just fluctuate depending on the basket, but it's about 60%, basically 2/3 of the dollar index is made up of the euro, just so you know. So that's basically unchanged for the euro dollar, and also unchanged for the dollar index. And Bitcoin, well, I guess Bitcoin, that should be blue as well. I should have made these blue, but Bitcoin was actually the biggest mover last week, and we don't even think about it, do we? Because it's only up 4%. It does 4% in an afternoon, or does not do 4% in an afternoon. But you know what I'm saying? We've got big moves in that. Again, price in US dollars, marginally up. Maybe it has found a bottom. All right, let me have a quick look back, and stronger than ever. Andrew's back, Clive. Good afternoon, Clive. Good to see you again. Andrew's back at last. Yeah, tell all the followers, Clive, where you are. I can't remember. Yeah, I remember you before. Clive, I don't know if you're doing your assessments these days. I know you were doing them before, and we've obviously I sort of lost a bit of contact with you. But there you go. This is 15% discount here. 15% off these assessments if you wanted to get involved in that, Clive. Okay. And go and check out. Go and check out the rules in here. Obviously, you know my background, but these I think are the best and the fairest in the industry. We actually had a little seminar last week, the team, and we were saying this, how we looked at we compare with ourselves with all the others, always making sure we're we're on we're up there, and I think it's generally fair to say that we are the most fairest to give yourself. And there's also a variety of different challenges you can do there, Clive, as well. So have a look at those. I can't remember where you were on the last ones, but now you've got that little discount code to have a go. So there you are. And that should be in the chat as well. If anyone's listening in, they can just click that link. Right. Okay. So this week, what's going on this week? Let's just get through this so we can get through and get to look at some charts. Again, this is the European flag, as you all knew. That's the European flag. I guess you all knew that. We had a lot of PMI data out this morning. PMI, again, bit of education here. PMI stands for Purchasing Managers Index. Okay, it's basically a survey. It's a survey that goes out to, I think it's 3,000 business leaders in these different sectors, manufacturing and services and so forth. And anything above 50 is deemed to be an economy that's expanding. Okay, so if it's 50 or 51, what have you, that basically means these business leaders are very hopeful and confident about the future. Anything below 50 is an economy that is contracting. I know a lot of you haven't been watching this, but when COVID hit, for example, these numbers went into single digits. I mean, these were like down at 8, 9, 10%, some of these PMIs, as the whole world was becoming doom and gloom. But now you'll see here that the green number basically means it's better than expected. So on the right-hand side, you've got what was expected, and this was the actual number. Now, these came out this morning. Euro actually went a little bit stronger when these came out this morning. I'll tell you now, Central bankers love a PMI. Okay, they really do look at this number as a main event, a main sort of economic release throughout the month. Why do they look at it? Why do they give it so much weight? Well, basically because it's like a forward-looking indicator. It's not sort of a lagging indicator that tells you what retail sales did last month. Okay, that's great, that's happened. But this tells you what the business leaders are thinking going forward. And of course, if business leaders are optimistic and confident about the economy, well, what are they doing? Well, it means they're employing more staff. It means they're investing more in plant and machinery and infrastructure. And if they're investing more in plant and machinery and infrastructure, that's obviously inflationary. Money goes into these raw materials, gold, oil, the copper and so forth. So it basically means more investment goes in. So if the business leaders are confident about the future, they start investing. And the central bankers always want to be ahead of the curve. And being ahead of the curve is one of the reasons why they look at a PMI data. So again, even if you're not trading the fundamentals, when you see on the economic release or you listen to me every week, you should mark it down, PMI out later. And we've actually got PMI data out in the US at 145, which is in about 20 minutes from now. Okay, flash PMI in the USA, Central FOMC, like that. Look at that. It's due to come in slightly lower than lower than last month, but not a lot in there. But the euro went better on the back of these numbers coming out this morning. And just beware this afternoon at 6 p.m. UK time, which is there's only 4 hours difference at the moment. So that's basically 2 p.m. New York time, 2 p.m. on the East Coast of America. That's obviously 11 a.m. on the West Coast of America. Bailey is speaking, Governor Bailey, Bank of England governor, where we'll again get clues. Generally, he does speak after the Bank of England decision the previous week, and he just generally reaffirms, although some people hear it for the first time, reaffirms what he was saying the previous week. So if he is going to reaffirm, he's basically going to say, economy's doing well. They're going to keep an eye on the budget this week, but there is room for cuts coming down. That's basically what he will say. If anything, it's more likely to be pound supportive than pound negative. Okay, so that's today, Monday. Tuesday, quiet day on Tuesday. This is, so it's basically in the middle of before you all get to your desks on on Tuesday morning. So it's basically 5 a.m. in the morning, which is what's the time in Japan? I think they're 7 hours in front. I think. Oh, it's on my clock. Yeah. That's consumer price index coming out. Now, I wouldn't normally put this down as a big news event. It's actually classed as an orange news event on the on the economic calendar, which means it doesn't have too much of an impact. But I think it's an interesting one this time around, and we've also got another one later on in the week from Tokyo, because it's telling us basically what inflation is looking at, and we know that we want, we need, or Governor Ueda wants to see inflation, stabilizing around 2%, and that's on the way up, of course, before they start thinking about raising interest rates. So that's basically what they want to do. So keep an eye on that. And remember, Japan, the Japanese currency is the third most actively traded currency on the planet: dollar, euro, and the Japanese yen. If you really want to know the numbers off my head, dollar is 88%, euro is 33%, Japanese yen is 40%, and the UK sterling is 11%. Just off my head, I looked at that last couple of months ago. But that's basically where it is. So it's a big, important currency on the basket. A lot of traders will ask me, what currencies they should trade, as a choice. And I always say, well, don't necessarily need to trade all 28 currencies. Trade a few, master a few. I think it's good to have a Japanese yen in there somewhere, maybe euro against the yen, the top 2 and 3 currencies. It's normally something going on there. So keep an eye on that if you're interested. Wednesday, we've got the consumer price index out of Australia again. And when I did this last week, it didn't have an estimate. I'm just seeing if we've got an estimate now for this, if I can update this or not. Bear with me a second. No, they're still not showing any estimate for CPI. No. Okay, so last month yeah, last month it came in at 2.5. There's no estimate here at the moment, so it's difficult to understand how it's going to impact because, but you can check beforehand. You go to the economic calendars that you might look at. You may see it updated maybe in the next 24 hours or so. UK numbers now come out at 7 o'clock in the morning. Used to be 11:30 in the morning, then 9 o'clock. Now it's 7 in the morning. CPI coming in year on year at 2.9%. So that's edging up, although it's down from last month. But do you remember the day of the budget last year, not budget, the election last, whenever that was, 9 months ago, inflation got to the target of 2%, and then it's been edging up since then as well. But inflation now is due to come down a smidge. And indeed, inflation is likely, they think, Bailey has been saying this, that inflation is likely to hang around this sort of zone for pretty much the whole of this year. 12:30 in the afternoon, we've got US durable goods. Again, not normally flagged as a main event, but I think it is an interesting one because of what's going on there in the US. Durable goods are basically the sort of high ticket items like durable goods like washing machines and tumble dryers, and they're not talking about everyday spending. It's what people would normally save up for or buy on credit, for example. And people normally generally do that, not just because your washing machine breaks down, but they generally buy these durable goods if they're confident about the economy and they're confident about their jobs and they're confident about they're going to have money in time. So durable goods. And of course, there's a massive drop. Last month, it was up 3.2% year on year. It's now expected to come down at 0.6. Now, this is obviously, I think, down to this is month on month, I beg your pardon. This is down to, I think, well, clearly, I haven't read other economists, but I think it's clearly down to the fact of tariffs. Okay, so people are just hanging back, hanging back on, not that confident. So we're seeing maybe a drop in durable goods because of that. People feeling that if they've got less money in their pockets and will hold back on these big ticket items, so they're more confident type of thing. Thursday, we've got final GDP out of the US, 2.4% from 2.3%. If you ever heard that, the R word, recession. Recession basically is when you have 2 consecutive quarters with negative growth. Well, we're far away from negative growth, although we are, obviously, there is talk in the economic world now about, is the US going to drop into a recession with the tariffs and so forth. Well, looking at it at the moment, it looks as though we're far away from recession fears. And then we've got, as I say, Tokyo CPI, Tokyo Consumer Price Index at the on Thursday as well. Tokyo, the biggest city in Japan, again expected to show a year on year at 2.2%, in line with the general Japanese inflation. Friday is the busiest day of the week in terms of economic releases. First off, in the UK, we've got retail sales at 7 a.m. London time. Expected to show a drop in line with what you're seeing in the US as well. Expecting to see a drop in retail sales. Not why. I mean, obviously we've had rates high for a while and what have you. But we're expecting to see a drop of 0.3%. And that comes out. Retail sales is basically what's being bought and sold on the high street. Again, if it's if the numbers are strong, it means inflation is edging up because people are spending lots of money, and if people are spending money, it means prices go up. It's just basic economics. So we're expecting to see retail sales up 0.3. GDP out of Canada. Canada getting a lot of talks, a lot of mention this week, aren't they? And again, didn't have an economic forecast for that. So keep an eye on your economic calendars if indeed you're trading the loonie this week. Now, the core PCE. PCE stands for personal consumption expenditure. Yeah, I think that's right. Personal consumption expenditure. That comes out on Friday at 12:30. It's the last week where US numbers come out at 12:30 because UK clocks go forward on the weekend, and it's back to the usual 1:30 economic releases So we're expecting to see that come in at 0.3. Now, the PCE, so you know, is the main measure of inflation that the Fed look at. You think they look at CPI, well, they do look at CPI, Consumer Price Index. PCE is the most important one. Okay, so that's the most important one. That's the one that they put most weight on. Okay, and of course, if inflation is pushing higher, and these tariffs are going to have inflationary pressures, then you're going to see the PCE push higher. Again, this is a lagging indicator. It's from last month. Tariffs don't really take effect until the 1st of April. So we haven't really seen the effects of that in these data at the moment, but we will be keeping an eye on the inflation story in the US as it unfolds with these tariffs. But keep an eye on the PCE. If you're trading anything really, if you're trading stocks, if you're trading the S&P or the NAS or even the European stocks like the DAX and the FTSE, 12:30 on Friday, you can expect to see some movement in those markets. You can expect to see spreads widen if you're trading CFD currencies, because it is a reasonably big news event. So again, even if you're not trading the news, be aware of these news events as they happen. Okay. I always want to start off by having a quick look at this. Okay, I had this coded for me many years ago. It's basically I call it the momentum meter. I call it the momentum meter. It basically doesn't tell me the future. If it was, don't know if I'll be sharing it. But it tells me what currencies are doing in relation to each other. Doesn't mean they're going to continue doing that, but it tells me at this current snapshot what the currencies are doing. And I'm a believer in trading of just trying to get a simple edge. If you can create, in any strategy that you've got, if you can create a simple edge, and edge basically means it works out more in your favor over the long time frame, over the big sample of trades. If you can get an edge in your favor, you only need the slightest of edge, then you are, or you should be, taking the emotions aside, you should be a profitable trader. Your strategy should be profitable if you have an edge. And I think this shows us an edge in the currency markets. It tells me which currencies are strong and which currencies are weak. And if I'm following a trend, with the currencies, for example, there's two currencies in a transaction. That's why they're called pairs. There's one currency against another. There's one economy against another. This basically tells me which currencies are strong and which currencies are weak. As a trend follower, I want to buy the strong currencies. I want to buy the currencies, the economies that are at this moment in time trading, and against that, I'll sell currencies that are trading weak. If you're looking at two currencies, and there's different color coding here, I think if you right click on this, you can come up with the I can't remember how I did this now, years ago. There you go. If you right click on that, it should come up with the color coding. Euro is the light blue, dollar is green, pound. These are like the currency colors you'd expect. Australia, orange, New Zealand, grey, Canadian is purple, Swiss is white and is red, and this sort of orange is the Japanese yen. So you can swap this on any particular time frame. Okay. So this you can do this on any particular time frame. So I generally look at it on the 4-hour time frame. By the way, if you want to get this, just go to your indicator section, type in MOM, and it should come up, momentum meter. And here's the guy that did it for me. He used to work with me many years ago. I employed him somewhere, and he did this for me. So if you want to get that, that's the guy that wrote it. It's all open, free. Not selling anything there. You can just get that and stuck it onto your charts. And there you have it. So basically, showing me at the moment, as I mentioned earlier, This purple line is the Canadian dollar. Okay, this brown line is the Japanese yen. Now, I don't know if the Canadian dollar against the Japanese yen is going to continue being bought. I don't know that. I'll have to go to the charts and then in a minute, and I'll have a look at it. But I tell you, at the moment, that is where the money is flowing. The money is flowing into the Canadian dollar, and it's flowing out of the Japanese yen. I'll look at that in a second. So here you've got the Australian. Okay, you had those Australian numbers. Remember, commodity currency. What's strong at the moment? The risk-on currencies. What are the stocks doing? The stocks are trading up. Stocks are looks as though they've found a bit of a support. Not that I'm buying into that, but the stocks are finding a bit of a support at the moment. Yeah, commodity currencies are strong. Okay, New Zealand dollar, commodity currency as well. That is not, but the Aussie and the Canadian dollar are looking strong. And these low-yielding currencies, like the yen, is trading lower. The dollar also is coming lower. So at the moment, at this moment in time, kicking off Monday, the dollar, having had this big run up, had the FOMC on Friday, on Wednesday, basically found the top of the dollar, and now the dollar is trading lower. If you see two currencies, if you look at these two currencies, like this red and the white line, that's basically the Swiss franc and the pound. They're basically moving together. If you're a trend follower, why would you want to be trading the CAD against the Swiss francs against the pound? They're moving in line. Surely there is an edge by buying a strong and selling a weak. That's all it is. It's as simple theory as that. I've been using it since I came onto the screens I had it actually coded in MT4 many years ago before I even came onto the education space in 2015. But I have got an MT4 version. If anyone needs it, you can just buzz me. MT4, MT5. I've got both actually now. I think I got him to do both last year. So you've got basically an edge right there for you. Let's have a look here. Just having a quick look at these questions. Do you think being down doesn't have anything to do with the sale season that's happening in the US? How do you compare the figures? Do I think it's anything to do with the sales seasons in the US? I don't know, to be honest. Good question. I don't know if that is the case. I think it's more likely to do with the fact that the economies they're worried about Trump. Quite frankly, I think that's what it is more than anything. But maybe through the sales, I don't know how impactful that would be. But there you are. Yeah, and that's right. The DXY was the euro is in the DXY. So there you are. Okay, so let's have a look then at the CAD against the Japanese yen. So once you've looked at a currency, then you go down and have a look a little deeper into the actual currency and see if indeed there are any trading opportunities. So CAD against the yen. Okay, so this is the CAD against the yen. You see we hit this liquidity zone. I'm flying this at the first time of asking. Obviously, this was the low back in August of last year. Okay, this is, and it's also back here as well. It is a level where you may consider it to be a liquidity zone. You have the price action now taking you back through. I think this is actually quite a strong currency now, isn't it? This was a definitely level of significance. This big V shape back from September of last year. We've now broken through it. Always, I don't know why it happens so often, but often when you see these levels of resistance broken, and then they get retested, liquidity areas get retested. It's one of my strategies that I teach, basically the boomerang, where you retest liquidity zones. This is actually quite a bullish little pattern coming on here. Back down at this support zone. So you've obviously got an easy place to place your stops, which should be below this liquidity zone. And this really could motor on back up to the next liquidity zone. Where's the next liquidity zone? Well, we might as well do a bit of zoning while we're on this chart. I would say that this is a zone that you can realistically target on here. Okay, that is a zone. Okay, if you're looking at these levels and you're looking for an edge, you've bought a strong currency, you're looking at selling a weak currency. The Canadian dollar is looking strong, yen's looking weak, it stops below the spring low. You get a risk reward on there of just over 2 to 1, just by basically looking at that. You got the odds, not the odds, but you got the edge of strong over weak. You found a support zone, old support, old resistance acting as new support. A couple of daily candles in there, indecision, and a big surge on higher today. I don't know about you, but I actually quite like that. I'm not going to put the disclaimer again now, but you understand, don't go and trade that just for the sake of it. Goodness gracious me, that'd be madness to do that just because I've given you a little bit of a view. It's, it doesn't fit in with your strategy, then you shouldn't be going even near it. You should be trading your own strategy. I tell you now, and I wasn't trading last week, but for those of you that have been following me on the 4-hour chart, looking at that zone, this here is my boomerang reversal. The setup is right there. I can see immediately the setup that we trade. Markets are making lower lows. There we go. Hits this low down here, pulls back. Every markets have pullbacks, and then the continuation of that price structure, it fails to take out the previous low. That here, as you will know if you've been following me at all, is is a boomerang reversal. Here it is. That is the pattern. You'll see that pattern time and time again when you're watching me looking for analysis. It's basically simple price action where the trend fails to continue. That price structural break is a place you go long. It's now come back to retest it, as it often does, and off it's going again. I'll leave it up to you whether you want to do that. I'm referring to durable goods, ISA. Maybe. Yeah, maybe. Sales season, durable goods lower. Maybe. If you've read that elsewhere, he says maybe you're right. Is that just your analysis, or do you think that's you read that elsewhere? Because maybe it's true. I just haven't got myself too familiar with that. So that's the CAD against the yen. Okay, so let's just do a little bit of zoning. As I say, these are the roadblock resistances and support zones. These are areas on the chart that I think you should do each and every week. I encourage you to do this ahead of the trading week, so you don't have this sort of unconscious bias when you see a potential trade setup, and you don't want to be, you want to do this when nothing is affecting your mind. Unconscious bias is a big sort of psychological hurdle that you really want to try and avoid. So doing this at the beginning of the week, maybe on a weekend, if you can, if you've got a couple of hours, just go and do your zoning before the market opens on a Monday. That way you're not going to be subjected to real time sort of emotions as it happens. So we'll do a bit of zoning now. Let's have a look at the euro against the dollar. This, of course, is the most actively traded currency pair. When you're doing your zoning, okay, there's two things I would suggest you could possibly do. Is start off on the daily time frame, and then you can possibly move down to the 4-hour time frame. Again, depending on what time period you're trading. Obviously, it stands to reason that the higher time frames, the 4-hour and the daily and the weekly and the monthly, and there's more volume that goes behind the making up of these zones on the higher time frames. Clearly, the players that make up a 1-minute candle a lot less than the players that make up and the price action, of course, on the higher time frames. So we've got the I mean, this has got to be a zone, hasn't it? Where we are now. Okay, had I done this on a Friday or last week, I'd be having this as a zone. That's a zone. Okay, and what I'd be saying here is, if I'm looking at this candle, I wouldn't have bought into this zone. Okay, this one did, it's held the zone, but this is a zone that clearly it's not just us looking at. But I wouldn't have been buying in here. Okay, into that zone on the daily chart. If my little 15-minute strategy or 1-hour strategy gave me a buy signal, I'd have left that alone until we got past this first sort of base of this zone. Clearly, if we get up to here, double top up there, I will say with confidence, if we get up to 112, a long way away from here now, but with this type of move, look, you had this type of move in 5 days, in a week, you had this type of move. So, and that's from 104 all the way up to 109, 500 pip move in about 5 days, 6 days. There's a bit of volatility coming in here at the moment. I can tell you, when we get up to 112, I would be very surprised if we smash on through 112 without consideration at some point, whether it's going to have initial pullback for a while before we get there. But for us to see a 15-minute candle just come up to there and carry on trading through, I would be very, very surprised at that. If I'm trading trend and I'm trying to buy the euro against the dollar, I'm not going to buy at 111.75, 25 pips ahead of a significant level. I'm just not going to do it, and I'm just going to say, well, hard as that is, I love this trend. I'm just not going to do it. I'm going to sit on my hands and do nothing. Remember, it's all about that edge and making that edge, play out. It really, I think, don't take my word for it. Go and do some back testing, but really improve your win-loss ratio. Okay. Let's have a look here. So that's that basically the zone up here. Lower zones. Okay, a lower zone, I would be saying this low to this low down here. That's a level. I think you're going to see some interest, whether it's buying or selling. You don't know until you get down there, of course. But this is a zone 106.20, 106.50 to 106.25, where the institutions will be having orders, whether they're buy stop orders or sell stop orders. This is where you expect to see some price action. You may have a boomerang or a trend following strategy, mine or your own. Be aware of this level, euro dollar. There's a zone there. This whole ascent started from 103.50. Excuse me, 103.50. So this zone here is a level of interest. Again, if you've been following me for any period of time, you'll know how I love a 50% level. 50% of the high from this low comes in at where we are now, 107.80. Being interesting. This little pullback we're seeing at the moment, I'll be off. Oh, I missed that PMI data. But because I didn't have my squawk on. But yeah, I'll be off stream at the time. But keep an eye on that level, 107.80. When we get back down there in a few moments, maybe this afternoon. It's having a little push at it at the moment as the dollar is having a bit of a bounce. Let's just have a quick look at something. See if that PMI data did anything to that. So 8 minutes ago, yeah. So this is basically the PMI data. It knocked 30 pips off this currency pair. So as I said to you about PMI, it came out exactly there. There's a 30 pip move there that's come out because of a PMI data, which I've missed because I didn't have my squawk on. But that's what I'm saying, being aware of these numbers before they come out. So there you have it. So that's the euro dollar. Let's have a look at the euro yen. I said trading yen cross might be looking good. We have got the CAD yen mapped out or zoned out, I should say. Again, guys, I know this is hindsight. You don't come in here for hindsight, but this is the boomerang reversal right here. That's the reversing of it. That break of structure here. Had I been actively trading the markets, this is one that I'll be flagging up on a Sunday, looking for me to get short once we broke through that zone there. A nice little reversal. Again, boomerang reversal. But it's just basically price action. And we've got a double bottom coming in here. Anyway, just go back to the zones. Let me get rid of that. Let's have a look here. We've got right. You've got a double bottom down here. Recent double bottoms. When you look at double bottoms or double tops from way back, certainly if you're looking on that's a 4-hour chart, 1-hour chart, but it's there on the 4-hour chart. It's the most recent that count the most, yeah. You don't want to be looking at double bottoms down here and what have you. If if price action has gone through it numerous times since that double bottom, it basically negates it, yeah. So it's important at the moment, and this one is, I think, important. And again, you had a double top here, did go through it, but came back to retest it. I think this is a zone that you'll be looking at on the 4-hour chart, and indeed it's bounced off it more recently. So this is a zone I'll be looking at. Clearly, you might think it's just good old support and resistance, but these are zones where there are orders. There are pending orders here at the zone. They could be buy stops for the breakout trader. It could be liquidity that institutions want to sell at. So they will push the market into here so that they can sell it. This will be a level of interest, a level of liquidity. So zone out. You want to have so many lines on the chart, you don't do anything. But just the key levels, picking your trading battles. Let's have a look at cable for a minute. Cable. I'll tell you one. Okay, Sophie. You know what? If you're still listening, to test you. Sophia, so I should say. So Sophia, why is the cable called cable? The cable is the pound against the US dollar. Do you know why? If you're listening in, Sophia, jot me down the answer. If you're not listening in, then I'll throw it out to everyone else in a moment. Okay, so let's have a look at the zones in here. Well, you've got a double top up here. We rolled off it as the dollar now is gaining a little bit of strength. Would you think this is a zone? I think this is a zone. No idea. She's listening in at least. Anyone else know why cable is called cable? Yeah. Any idea? Because there's a cable between the US on the sea bottom. Calvin, old boy. Good to see you again. Good to see you again. Did you tell all the others that we're now back live streaming? Bring them over. Get them to say hi. Correct, Calvin. Calvin here has said because there is. I beg your pardon. That's wrong. Oh yeah, sorry. Because there was a cable. Well, many years ago, before we had internet, before we had global satellites and what have you, there used to be a big fat cable running across the Atlantic Ocean, linking the US financial markets to the UK financial markets, where the gold fix, the gold traders used to send their signals down this cable for the London fix. So it literally was a cable going between the US and the UK, where financial transactions were passed through. That is why pound against the US dollar is called cable, international phone call. ISIS says international phone call. Well, there's the answer, because of the cable where financial transactions took place. See, you come to this stream, you're always going to learn something. If you think the rest is a load of old nonsense, now you've walked away with something, you've actually learned something. And if you do your pub quiz on a Friday night, and you want to set your questions, well, now you can set a question without using ChatGPT. Right. Let me just turn that off. Right. Okay. Let's have a look here. We've got. I mean, I would be looking here. Okay, we had this big sort of surge up through this liquidity zone, broke out, retested. Okay, so here, so this is where our impulsive wave, if you like, if you follow that, took hold. Okay, and then we had the, almost like the price acceptance. It pulled back to this zone before it went off again. I'm not saying I wouldn't sell it here on the reversal. But if you're trading the lower time frame charts and a 5-minute chart or 1-minute chart on a scalp, would you sell it here, or do you want to leave that trade and do something else? It's most probably not big enough to hold this bigger trend. I can tell you now that if you're following boomerang reversals, this break of this structure here is a reversal all the way back down to here. So at some point, I'll go through the rules of the strategies with anyone who wants to the rules and so forth that I trade. That's normally left for serious players, but that is potentially where you're going to see a break of this structure, which would come in around there. And if I'm trading that on the higher time frame charts, because that's what I tend to do, this most probably wouldn't stop me selling it. It's more of a break of structure. Look at, yeah, it's now redundant. I think that cable. Yeah, I don't know, use it for something else, I guess. So cable, and I would be saying on the longer time period, if you're targeting, if you've got shorts and you're targeting liquidity to the downside, and this is a lot lower down, okay. Oops, daisy, excuse me. Target zones on short trades will be down to this zone here. You'd expect to see some liquidity down here. You may see, if the institutions have got to get rid of, got to start buying some dollars, then this zone down here is maybe where they will be targeting. I think it's certainly a realistic profit target for any short trades, TP1, TP2, if you get yourself short. So even on that boomerang reversal, you get maybe a 3.5 to 1 on this structural reversal in there. Let's have a quick look. I've gone over an hour. Sorry about that. If you're still here, good luck to you. I'll have a quick look at gold because, as we know, well, you don't know, but I know Calvin is a gold trader. I think that's all you trade, isn't it, Calvin? This is the 4-hour gold. All-time highs got up to, I thought it was 44. Got up to 30.57 last week on Wednesday before FOMC, yeah? Before the rate announcement. Here is your reversal pattern. Okay, this is break of structure. It did go back up to retest. Stops above there. Again, don't be trading this now. It's madness to be trading what I'm saying without having a back-tested strategy rules to you. But that break of structure, I would be looking at a target down there at 2950, really. I think this double top before, it's a relevant double top, although we did smash through it. There are breakout traders that are long from here. They don't want to lose money on that trade. There are institutions that took this gold higher. And I know you have to look at the central bank reports, the central bank buying of gold. Okay. And this is clearly a level where central banks would have been getting themselves long. It's going to be protected. So I would be looking at covering any shorts back down at 90.50. Yeah, 29.50. I beg your pardon. So anyway, I'll leave it there now with fear of going on all afternoon. And but I encourage you to do that. I encourage you to do your zoning on the weekend beforehand. Don't leave it to the real time, because then, as I say, you're going to be subject to this forward bias, unconscious bias type of thing. So yeah, get that done. Of course, we'll always be doing it ourselves here as well. We've got PCE on Friday, and I tell you what I'll do. Friday afternoon, I will come online at 12:30 UK time for personal consumption expenditure. Might not do very much, but it'd be good to come on at the end of the week as well. Just have a quick chat. So if you want to come along and say hi, do come along and let me know. Again, if you want me to talk about anything in particular, let me know, and we can look at any particular charts that you want to look at. Don't forget, we've got the 15% off these assessments, which is on the, well, you can see it on the screen there. It's off on the 12.5, the 25, and the 50 experienced trader programs. You've got to be in it to win it. So there you have it. Hopefully, we'll see you at the end of the week on Friday. If not, then of course I'll see you next Monday, same time if you're in the UK, but slightly different, of course, if you're in the US, because our clocks go forward over the weekend. Thanks for tuning in, guys. And I'll see you all very soon. Have a good week.